Good morning. It's Bruce here from Targeted Wealth Creation. All right, let's jump into Coney and Misty. I know a lot of you are probably concerned, don't like seeing all that red. You know, I try to let people know, just in case, you know, if you're chasing yield and you look at the Misty in particular, you look at Coney and you say, oh my gosh, that's what I want. And you come in and you make an acquisition and it's, you know, $28 for Coney. Well, Coney's traded consistently between 17, 18, and 30. Now, it's not always going to trade between that range, but there's some propensity for it to return to a lower range. You know, it's 1940, so 17 could easily happen. But, you know, it's no coincidence, I said this in my Y bit, that I put out some of that hedging information. I was asked by some large holders of subscribers and said, Bruce, I'm nervous. And I said, well, when you're nervous or if you just can't sleep in general, when it's not crashing because you're nervous, then you probably have too big a position. But the thing you can do is put insurance on. So I put out some of my series of videos on that. And for myself, when I looked at it, I didn't yet have fiat, right? I think it's an inverse FIAT. Fiat is coming in July as an inverse coin. So it's the perfect scenario for Coney, right, to own fiat. And again, I'm not saying go out and buy 100%. People ask me all the time, well, how much should I buy? Well, how much depends on, first off, how bullish are you? How worried would you be if there's a drawdown? You know, how much of your portfolio is in that position? How much is in yield? Are you retired and you're living on that yield? You know, there's a million questions that go into making that determination for someone. I'm not a financial advisor. I can only tell you, hey, here's what I own, right? I was adding Tesla last week. I wouldn't have touched Tesla for quite a while because as far as I was concerned, it was in a bear wave within a bullish upwave. So my guess is over the next 3 years, that's going to do very well. Now, I can be wrong in the short term. It may have 100 again for Tesla, right? But just based on what I see, it did a 20x, it did a minus 4x, you know, and it looks to me like it's ready for the next impulse wave, which who knows? Depends on FSD success. It depends on the Optimus robot success. I mean, it depends on a lot of things. But I think it's got real potential. But I like to go into a sector that's hated and unloved, right? I wouldn't be buying NVIDIA right now. Would I tell everybody to sell NVIDIA? No. Is there possible some more upside in NVIDIA? Yeah. But there's more probability of downside when you go up as high and as fast and as far as it has, right? Any of these things, even Bitcoin, you know, it swings. I'm bullish on Bitcoin. I see 125, I see 250 out there in multi years. But that doesn't mean that I don't recognize that it can go to, you know, I said the other day, 52 is major support. So it's that 55, 56 is your 200-day moving average. 52 parallels back to a equal top. And what are we doing? You know, once we broke 65, I said, now we're in a bounce. Let me check the aftermarket or pre-market. Yeah, we're bouncing up. We hit 58,410 as a low overnight, and then we've moved up to, right now I'm seeing 69.15, right? With about 4 hours before, again, because Bitcoin trades 24 hours. So that's a nice bounce, but that's probably all it is on this interim. As a shareholder, I hope not. But again, I own a bunch of Biddy. I didn't buy any SBIT, the 2-buy, but I have too much in Misty and Cony to not be positioned in those, right? So let's take a look just to show you guys. To me, that was an easy hedge, you know. But again, I didn't go out to buy 100% of what I own. Here's BIDI. What is BIDI? Well, BIDI is BTC inverse from ProShares, right? They have BIDO, which is 1-buy long. This is a 1-buy short. So what did it do? It went up 7.93, right? We were only down. Let's go over that number. And just to show you, what did SBIT, the 2-buy bear, right? Look at this. Now, it'll probably fill that gap right there. Who knows if it'll do another, but let's say that what we're doing is we bounce, we come back here. Is there another little short wave up to 50 or something? So a lot of that depends on if we see 55, 56, or even 52. Heaven forbid. I saw one Elliott wave that looked pretty reasonable to me that had it to 44. You know, and I shared that the other day in one of my videos on Cony and Misty. I said, well, here's one man's view, right? I liked his Elliott wave on analyzing gold and oil. And then when I looked at his Elliott wave on BTC, I was like, oh, man, I hope it doesn't go to 44. But then I turn around and see another analyst that said MicroStrategy had a clear path to 2,800. And it was trading at 1,400. So which guy's right? Maybe both, right? Maybe short term, the Elliott wave was shorter term, right? So I don't know. I don't like to spread fear. And I know people today were annoyed, right? I didn't like it, but I felt a lot better knowing that I had some BIDI to offset some of that. So anyway, that's my tirade and my rant. If you haven't seen those videos, dial into, how to hedge Cony, because I showed that stuff. And obviously, fiat's going to be a good one. If you're hearing this and you're in VIDI, right? I'm not on that subject right now. DIPS is coming, right? I like a bunch of people, were calling it CHIPS, CHPS, but in fact, it's DIPS, right? Like your stock is dipping, DIPS. So you have to, and there are plenty, by the way, there are plenty of inverse ETFs on NVIDIA. Tesla, Amazon, Microsoft. I can go over that list. I probably should do a video on all of those, right? There's a lot of them. Now, the reason I say I like what Yieldmax is going to do, I'd rather have an income fund, right? I mean, you've got Tesla and you've got Tesla, and then you've got Crash. So I don't own any Crash right now because I'm bullish on Tesla, because I'm bullish on Tesla, right? So always be bullish on your underlying. Don't chase FOMO into a high yield, right? Please don't do that. And especially when you put all your funds in there and you got no dry powder when it comes down. I was doing a YBIT earlier, and I said, hey, BIDO's down to 22 something. And I said, well, on the chart, if it just retraces to the next major resistance, it's like $19.40 for BIDO. But I'm buying more YBIT. Why? Because I'm bullish more on the long term, right? Near term and long term. Near term can be a month, 2 months, 3 months. Okay, guys, so 6% coin went down. 4.9% is what Cony went down. So we outperformed. Again, there's always those guys out there. You got 100% of the downside. You know what they're doing? They're taking what Jay says on the website. Well, Jay is limited what he can say. If he goes out there and starts singing a bullish song and somebody loses money, he can be sued. He has to walk the conservative line. And I understand that. Not everybody else does, but you got these guys that think they know the fund. Well, it's got 100% of the downside, as if that's a statement. Well, that's impossible if you're selling naked weekly calls, okay? They're not covered calls. I say that a million times. Oh, well, Jay said it's a covered call. He did not. He said it's a covered call strategy, which means they have two, a call and a put that's bullish, and they sort of cover that, but it's not a covered call. There's a specific definition for covered call. It can be a covered call strategy to offset, right, to try and produce income, but you can't cover it by an actual call. You know, does it get assigned your synthetic? No. So that word just is a strategy. And you know, there's just people that say all the wrong things. I'm not saying Yieldmax shouldn't say that, because they're smart. They call it what it is, a covered call strategy, but it's not a specific covered call. So anyway, I don't want to beat it to death. I just get tired of people who challenge that they know all this stuff, and they really don't know it. You know, they really don't know it. So it doesn't have 100%. Am I going to, you know, argue that it's not 93 or 80? You know, it's a big number, the downside. But you do win those weeklies by default if they keep on writing them when you're going down, 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 right? It's not a pleasant thing. I don't want to be in the fun and go down. All right, let's go over and see what happened. I'm sorry, but it's important sometimes, especially on days like today. And hey, this bounce, I hope it bounces, but very likely, based on the pattern, it's probably a little bear flag, and it's going to bounce for a day or two or three, and then continue on down. But maybe not. Would I be happy if it didn't? Of course. Okay. And I don't know, but probability says we may go a little lower. So we wrote a call, 2,100 contracts. We collected 268, and we went down to 220, 250. Well, why? Because we're down at 212, right? So we're like 5% out of the money, 4.8, and we've got 4 trading days. This thing we just about won. Now we're bouncing, but I don't see a bounce getting us up to any kind of major levels. I mean, I'd be happy if it did, and I'll be the first to say I was wrong on that, but I don't see it. The other trade, and why did they even make a trade? Because Cony hadn't done any synthetics for quite a while, because a lot of people went bargain shopping. And if you didn't already own some, or you wanted a DCA and you had direct, you know, dry powder, by all means, go in if you're bullish. I always ask the question, are you bullish? There's nothing worse than somebody who wrote Tesla down who was bullish, because they have to say, I was bullish, but I was wrong. But at what point and how much do you lose do you recognize you're wrong, right? The chart told you were wrong probably when you entered it, right? But that's a whole different thing to understand. So we had 1,475,000 net new shares, right? So that put some cash in the kitty. And what did they do with that? They put the 2,100 here. Let's go out and look at the 2,100 as a synthetic. Oh boy, they collected $10 million, right? So they bought a call for $3 and they sold a put for $50. Well, how can they do that? Well, look where they are. Hey, who knows what it was? Maybe it was 215, you know. The point is that this scenario is one where they're building a paper liability, but they got 24 days to expiration. So I don't see anything wrong with that strategy at all, especially when you want to keep paying out money. It only doesn't work when all it ever is go down. If this goes down to, you know, for 5 more months, you got another Tesla on your hand, and you're going to reverse split and all that kind of stuff. So if you're bullish on this, by all means, stay in. But maybe hedge your position if you can't sleep at night or something. I mean, we have 130 million. It sounds, I mean, it's a big number in a lot of ways, but in these funds with 30 million shares, yeah, it's $4 worth of movement on or sorry, 40. That's about $40 higher for this scenario. So if we go right to 252, we just about wipe that out, right? So it's $40 on coin. Coin can do that in a week if the BTC switches and goes. This is, you know, kind of a risk on, risk off scenario. First of all, I don't even know why coin, coin, Misty, Ybit, anything connected to BTC right now is connected to the FOMO and the NASDAQ. So a sell-off in the NASDAQ means a sell-off, and as if it was a tech stock. There's some technology behind crypto, right? But it's really not. It's a store of wealth. It's digital energy. I mean, I could go on and on and on about what it is. But the point is, it really isn't the same as a tech stock. But if the market sees it that way until it doesn't, right? So that's the scenario. Let's go look at a lot more here. So that's our synthetic. That put nice cash in, so I'm going there soon. So here's our weekly. So now we have a whole bunch out there at 237 that look pretty good now. We put 2100 at that, we're 4.8, right? But even if we bounce, just me personally, short term, we may be due for a further slide. But let's see. I mean, I'd love it if we didn't, but I got protection if we do. So we've collected out of this 9.3. When we add this, I think we had 8, and now we're at 9.3, and we've collected 6.6. Well, let's take a look at that. So here it is in holdings, right? This was $4 on Friday when it closed, and we had sold it for what, 3-something, 340. Okay, so now it's 77 cents based on the close on Monday. So that's looking pretty good. We could buy something that we sold for 8.7 back for 2. So if this thing turns and runs down, if I was these guys, I'd buy it back on Thursday, right? Depends on where they are, and you know, for pennies, you know, 10, 11 cents, and then write something else out. So when they added this, now we're behind on this guy a little bit. I think we sold it for 268, if I remember the number. Yeah, exactly. So the reality says, so they're 23% behind. Compared to this, it's not even 1/10, right? So it's more than 90% and 10%. So that one's less relevant, but pretty nice. Here's the share count. So there's where the money came from them. And they're more than willing to run this up to the 130 million. All right, so where did we close and what's fair value? We closed at 1940, saying fair value is 42. So that's reasonable. And you want to see a graph? Here's your synthetic 260, right? Of course, what happens to a synthetic? It's a buy, call, sell, put, which is all bullish. It reflects owning coin. And the covered call strategy, which is a naked call, is nothing more than a collection scheme, you know, that gets capped at 15%. But these people that go out and say you're limited to 15% on the upside are such fools. If it went up 7% every week and they went out of the money 10%, then every week you win on the weeklies. It's just if you rise 30% in a week, it hurts you on the weekly. So it negates a lot of the win. So again, a lot of people that are half smart, they think they know it, and they really don't understand it. Okay, sorry my tirade on that, but I see it all the time, and it's just so annoying. Okay. I'm sorry, I promise I won't say another word on that. All right, let's jump over into payments. And again, this is always subjective. You know, Yieldmax makes this decision. I wish I made this decision, you know. I think I would lean to making them bigger because I'm a recipient, right? I don't right now report on any fund I don't own, but I get requests every day for NVIDIA. I mean, I probably should from a popularity and the views and being monetized already and all of that. But I hadn't yet because I don't want to go in at this point. To me, the upside is is less than the downside. Or let's put it this way. I think there are other assets that I can FOMO into that are going to produce better results than NVIDIA is going forward. And I'll give you a little hint. AMD and AMD should probably do well. I don't know how much you guys go out and read, but NVIDIA had the best in class, no question, in their H1000, right? For the AI, the data centers were buying them up. Well, and their profits were obscene, right? So of course they ran and ran and ran, and they're going to be a great company, and they're going to do a lot, okay? Here's the problem. They got a 9-month lag in delivering. So when you take Amazon with its massive data center, right, cloud service, sorry, that competes with Amazon. Amazon's really #1 in cloud services, and Azure, Microsoft's is #2. What did they do a little while ago? They said, we're going with AMD. Why? Their product is only 80, 75, as efficient, as powerful. However, it's 30 or 40% cheaper. So you just put more of them together to then get the answer, right? Never mind. So you solve a problem. And to me, what does that say? That says AMD is going to benefit, right? Because NVIDIA can't deliver because their parts and supplies just, they're so popular. Now, is that a knock only? No, it's selling off because the markets are selling off. It is the market almost in the triple Qs. I'm not bearish. I'm just concerned at being toppy here. Right? So I don't chase, I don't FOMO into it because it's got a high yield. I'm happy for all those people that got in lower. Hang on to it. Hedge it if you want, but don't run out and sell it. I'm just not diving into it right now. The time to buy obviously was 6 or 8 months ago. Okay, so what are we going to do here on this? We've made $2.32. This was at 77 million. It jumped to 87 million. And if we get more money in here, people buying on sale, it's going to go up higher. But you've also got a situation where just how much do they want to pay knowing they've got a $130 million loss? On paper. Okay? Again, that's 40 points in coin. Coin needs to be 250. And it wipes that 130 million. So I like to put it into perspective, okay? They're driving this number down. This number was 60, and before the shares piled in, if it was still at the old share count, it would be 50. So they're working it down. They've only got one more week of weeklies, to win. And they'll write those this Friday, Thursday, if they roll some things. So this is a hard one. They could turn around, they could go out and pay $2 and have the cash to pay it. But with that big a liability out there, I'm being conservative, and I'm giving you my payout estimation right now, and subject to change, through Friday, in a way, or if people buy in more and this drops to 50 cents. But I got $1.55. Why do I have that? Because it's a heck of a yield, right? Where's our current price? $19.40. They're not going to FOMO into paying us, $2.50 or $2.30. At least I believe that they wouldn't do that when they have that liability, when they have that $130 million. So I'm going with $1.55 right now for a 95% yield, which is up in their better payments in general. 1.6, it's not their best. The two lowest ones were $1.07 if you go back on the 9 months of payments, and their better ones are the low 2s and the 269 and 279. So I think they come in with another category here. All right, guys, that's what I got for you. Sorry about the rants, just sometimes. And listen, if you own Cony, you don't have capital to go more, and you're worried, just take a deep breath. with Bitcoin, welcome to the volatility world. That's why we get such yields, right? And it could go lower. If you're there, you're looking at your phone or you're looking at your laptop and you're stressing, just turn it off and go outside. If you got a little bit of capital and you want to buy one of these, the BIDI or SBIT, buy a little bit. I mean, it can't hurt you at this point. All right, guys, that's all I got. Again, I'm not a financial advisor. This is not financial advice. Have a great week. Hope we all have better days. Thanks. Bye.